This is what I hear. Oh, well, we can just sell it. They'll just sell everything when I'm dead. Yes, that's what they're going to do in a fire sale. People are going to take advantage of them because they're mourning and now they got to go list a property and then they have to figure out where they're going to live. In the meantime, the bank's knocking on the door asking for the payment, forcing a sale. If you guys actually saw what I see, what happens to people and the stories I hear after people die, you'd go get yourself some death benefit. And that is spoken like a true life insurance salesman because we see the most horrible things that most people are never going to talk about because they're not in this industry. Hello, and welcome back to the podcast. Thank you very much for being here. Hey, I recently had somebody interview me on a podcast, and then later I heard them say that this is not for everybody because this can be done in a money market account. And I actually hear that a lot. And it usually comes from people that have read the book and don't understand it, or they have just actually never read the book and they've never actually dived into the concept as a whole. But it is a very, very common misconception. So let's go over 5 reasons why the infinite banking concept cannot be done with a money market account. I didn't put this down as a reason, but if it could, wouldn't I just tell people to go to the bank? I don't have this huge dislike for the bank. I don't hate bankers. And so I use banks, people. I use the bank. I have bank loans. And so it's so funny when people think, oh, Mary Jo just hates the bank. That's what she just out there trying to get to the banks. No, I'm not. That is so absolutely crazy. Anywho, let's just talk about the 5 reasons why a money market is not the same as farming without the bank and the infinite banking concept. Number 1, a money market does not allow you to have uninterrupted compound interest. This is by far probably the biggest thing because one of the only reasons that we are using a whole life insurance policy is because our money is used as collateral. So our money is constantly growing while we use somebody else's money. If we are using a money market account, you are going to put all of your money into a money market account. You are then going to take it out. As soon as you take it out, it is going to go down to 0. Then, right, because we've saved, if you're watching me on video, we've saved and then we drained it. And then we had to start over to save again. And then we drained it. Every single time we start from 0 and go back up or wherever, anytime we take money out, we are now earning interest on a lower amount before it gets back up to the top. And so the uninterrupted compound interest is huge, absolutely huge. It is the same reason it doesn't work with an IRA because we have the interruption of money. And so if we think that, we're just going to use a money market account, we're going to use cash, there is lost opportunity on that cash because we've taken it out. So that to me is one of the simplest things that people miss because they just can't get past the fact that they have to borrow against their policy. Oh, we can do this with a savings account. No, you can't. The uninterrupted compound interest over your lifetime is massive. If it was not, I wouldn't be teaching this. I wouldn't be promoting this. I would just go and keep using cash because that's what I was doing. Okay, number 2, the money market does not pay dividends. If you have your money in a bank, you are not going to get dividends. Unless you are in with Farm Credit Services, they give you back a dividend. If you have it in a credit union, they're going to give you a dividend. guess what? Those dividends are taxed. And so you get to pay tax on those dividends. You don't have to pay tax on the dividend of a life insurance policy. No, sir, you do not. And so those dividends are not even treated equally. Number 3, you get paid interest on your money market account, but you also pay tax on the interest. You get a 1099 at the end of the year. I have a money market account. Guess what? I get to pay taxes on that sucker. Oh, that's absolutely fantastic. As if I need any more taxes to pay. Aren't we all trying to avoid taxes? If we're borrowing against the policy, we are doing that income tax free. The money is growing income tax free. We are not paying taxes on any interest that is coming out of the policy because we're borrowing it. If you take it out, yes, you might end up paying taxes, depending on what you do. If you borrow the money and you use the policy correctly, the interest goes back into the policy and it grows income tax free as long as you're borrowing. We don't ideally ever want to take money out because if we take money out, guess what? We got to pay taxes. A money market does not, number 4. A money market does not have a death benefit attached to it. What happens if you die? There's no death benefit. Maybe you had to buy some term on the other side of things, but why not just kill 2 birds with 1 stone? Why not have your policy and your death benefit at the same time? If you have a loan in your policy, your heirs, the loan's going to be paid for, your heirs are going to get the difference. And people say, oh, well, I want my heirs to have more death benefit. My friend, if you die, they're going to use your death benefit to pay off all those expenses anyway. So essentially, it's the same thing. You pass away, your term gets paid out, they use it to pay off the bank. Same thing, right? Here, it's automatically done. And so most people, it is unbelievable to me. It is actually shocking to me how many people have massive amounts of loans, equipment, land, mortgages, cars, cattle, massive amounts of loan and no death benefit. None. They might have $2 million, $3 million in loans, $4 million in loans. If they do have death benefit, might be $500,000, might be $250,000. Do you know how rare it is for me to see somebody with more than $1 million of death benefit? $1 million or $1.5 million is very rare. Very rarely do I ever see somebody with the amount of death benefit that they need to take care of their family. The banks are crazy for not saying, hey, you need some credit life. You need some sort of term insurance so that if you die, I know I'm going to get paid. Y'all are out there with all these loans, and if you die, you really think your spouse is going to just be like, okay, well, I guess we need to start selling land and equipment. Yeah, that's what your spouse is going to do the next day? Come on. For the love of Pete, get yourself some death benefit. Take care of your family, for God's sake. It's unbelievable to me. And so you can have your money market. You can have your cash. You're doing a great job. You're farming with cash. You're already outside of the banking system. Good for you. But you don't have any death benefit. So this is what I hear. Oh, well, we can just sell it. They'll just sell everything when I'm dead. Yes, that's what they're going to do in a fire sale. People are going to take advantage of them because they're mourning and now they got to go list a property and then they have to figure out where they're going to live. In the meantime, the bank's knocking on the door asking for the payment, forcing a sale. If you guys actually saw what I see, what happens to people and the stories I hear after people die, you'd go get yourself some death benefit. And that is spoken like a true life insurance salesman, because we see the most horrible things that most people are never going to talk about because they're not in this industry. So that was I was a little bit off topic, but an important topic nonetheless. So there is no death benefit attached to a money market account. Number 5, your money is sitting in a bank. For some people, this one might not be a big deal. For other people, this is going to be a big deal. They do not want money in the bank because they don't trust the bank. Banks will do things like, hey, you need to pay me, so I'm just going to take it out of that savings account that you have because you're late on your payment. Or in 2008, when all the stuff was going down, I've heard stories of people who have said their bank account, they had, several $100,000s in their bank account, and they had loans with that same bank, and that bank just took that money and paid those loans off, didn't tell them anything, didn't ask permission to do so. Banks are just shutting down accounts. Money is just disappearing, right? And so if you have your money at the bank can just do whatever they want with it. If you guys did not know, when you make a deposit at the bank, that is no longer your money. It is their money. And they can decide what they want to do with it. It's awful. And so some people do not trust the bank. If we have our money with the life insurance policy or in our life insurance policy, that's a contract between us and the company. They have to, by contract, if we ask for a loan, they have to, by contract, give us that money. There's no questions asked. And so the only thing that we have similar between a money market account and a whole life insurance policy is the fact that the money is liquid. The bank account is quicker. The life insurance money is going to take you 3 to 5 days to get access to that money. 3 to 5 days. So you're going to have to plan just a little bit. So the only advantage that the money market has is that you have access to it immediately. It is liquid. That is the only similarity. There are 4 big ones, a 5th minor one, depending on how you think of the banks. 4 major reasons why this is different. But yet, people are out there saying, well, you could just do this with cash. You wouldn't even say that if you actually read the book and you actually tried to understand this. Because if you did, that point it's illustrated in my book. It is illustrated. Nelson also talks about lost opportunity cost and the fact of using cash. You finance everything you buy. You either give up interest to somebody else or you lose interest you could have otherwise earned. Come on, people. It's all right there. And so this gets me a little bit fired up when people start to tell me that this is like a money market. Oh, just use a money market account. And they haven't read the book. If you're going to have an opinion on something, at least research it. But anyway, here you go. Those are the 5 reasons why this is not like a money market. Let me know if you need anything, maryjo@withoutthebank.com. If you want to schedule your appointment, get your book, read it, call us if you don't have the link. Otherwise, you should have the link in your email. There's a link in the book to my schedule. And if you schedule your appointment, show up with your numbers ready, people. Come on. You get like 5 emails from us. Have your numbers ready so that I can help you. I can't help you if we just sit and talk about 0 numbers. Don't waste your time. Don't waste my time. Have your stuff ready. Okay, let me know if you need me. Have a good rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.